Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard, you may input core inputs or drivers for your model and see the core financials and core charts based on the assumptions. So the model starts from modeling of your annual marketing expenses, which you can input by years, for example 150,000, and additionally 50,000 per year, for example. Then you can input cost to acquire a new patient by years. It can grow also with some predicted amount per year. And based on these assumptions, you have total new patients by years as an output. Then you can change your patient base assumptions, which is percentage of new patients retained. Means that if patient was on the first initial treatment, and what is the percentage of retention after this first treatment. You can also input your patient base monthly churn, which means that your retained patients tend to churn over months, and based on these assumptions you may see the patient base or active patients at the end of the year. Additionally, you are able to change the seasonality of your marketing expenses on the Seasonality tab. So you may change the assumptions, the breakdown by years. If you don't need any seasonality, you can just input 1 divided by 12, which is roughly 8.3%, and you do not have any seasonality, just flat amount by months. The next tab is Revenue tab, where you can input the main services revenue. You have initial service, which will use 100% of your patients, and then you have up to 9 services or treatments, so you can input service A, service B, or whatever name you want to use. And you have usage frequency, means that 20% of initial patients will use your service A over the year. And you may input the price per service, which is dollars amount per one treatment. The next set of inputs is cost of goods sold. For the same set of services, you can input COGS as a percentage for cost of materials and COGS as a direct labor. This is also changeable by years, so you may change the assumptions in the way you need. Additionally, you have extra products revenue and COGS assumptions. You have up to 5 different products with different launch dates, which you can change. The sales of units per month, the annual sales growth, the product price, and margin to calculate the COGS. All these values are also changeable, so you can play with it in the way you need. The final things you need to input on the dashboard, this is safety stock for your extra products to calculate the inventory, and payment delay days for your accounts payable. Both these calculations you may see in here in balance sheet, the inventory, and accounts payable rows. As a final point, you can see the revenue breakdown, profitability, cash flow, and cumulative cash flow once you finish the input of your variable expenses, fixed expenses, and wages. On the Financial Charts tab, you may see 2 sets of charts, 24 months broken down by months and 5 years also broken down by months. On the top set of charts, you may see the main revenue streams breakdown, which is extra product revenue and main services revenue, and also the same chart broken down by 5 years. Below, you may see the main services revenue breakdown by 9 different services and initial service, and extra product revenue breakdown broken down by up to 5 different products. Below you may see operating cash flow, broken down by cash inflow, cash outflow, your cash balance, and your EBITDA is breakdown by total revenue, COGS, and operational expenses. On the operational charts, you may also see two sets of charts, broken down by 24 months and 5 years. Here we see the employee productivity, which is revenue per one employee and OPEX per one employee, and average monthly revenue per patient, broken down by 24 months and broken down by 5 years. On the benchmarks tab, you may find 5 different industry benchmarks. You may also change these benchmarks depending on the values for your industry and your country. For example, gross margin in your country is 70%, and you may see that gross margin benchmarks chart is updated with 70% value as industry benchmark. The same you may change for profit margin, wages as a percentage of revenue, average monthly revenue per patient, and average net profit per patient. The calculations based on the inputs and the model is here to the right of industry benchmarks, and you may see the 5 charts with projected values and with industry benchmark values. On the income statement tab, you may see your main components of your profit and loss, which is total revenue, total cost of goods sold, gross margin, total variable expenses, total admin salaries and wages, total fixed expenses, EBITDA, depreciation and amortization, EBIT, interest expense, net profit before tax, your corporate tax, and as a result, net profit after tax. Please note that each category has its own subcategories, so you may click on this plus button and see the detalization, for example, for fixed expenses, or for variable expenses, or for example for the revenue. On the cash flow statement, you may see your cash flow broken down by cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. The same information you may see on the cash flow statement in indirect method, operating, investing, and financing activities, but in more collapsed form, just easier to see the information here. And the balance sheet will show you the breakdown of your current assets, non-current assets, current liabilities, non-current liabilities, and equity by its subcategories. The summary of 3 statements you may find on the Financial Statement Summary tab. On the top you have income statement broken down by 5 years, and the selected year, which you can change here, broken down by months. Below you may see the same information on the chart form. The next set of tables and charts will show you the balance sheet, main KPIs broken down by 5 years and selected year by months. And the last part will show you the cash flow statement breakdown for the 5 years and for 12 months for the selected year, as well as charts with the same information. On the top revenue tab, you may find your revenue breakdown by main services and extra product, and also broken down by years and broken down by absolute values here and broken down by percentage allocation here. Below the numbers you may see the charts with the same information, with breakdown by absolute values and with breakdown by percentages. You can also use revenue dips and monthly run rate charts to see the detailed breakdown of some year, which you can choose here, and you may see this as a numbers and as a percentage breakdown. Below also you may find the revenue bridge, and you can also choose the selectors to set the first year and the last year, and you will see the difference between first year and last year and the main drivers of your revenue growth, which is main services and extra product. On the top expenses tab, you may find the breakdown of top 4 expenses categories, and all other expenses collapsed into other category. You may see the breakdown of absolute values broken down by years, with a total below, and also to the right you may see the percentage breakdown of these expenses. The same information you may see on the charts below, which you may find the percentage breakdown and the absolute values breakdown. On the couple of charts below you may find expenses depth and monthly run rate for selected year. You're able to change this year, and you may see the absolute values and percentage breakdown on the pie chart. On the expenses bridge you may find the main drivers of expenses growth between these 2 years. These years are also changeable, so you may select the first year and you may select the last year. And you may see that total expenses starting in 2020 will change to total expenses in 2024 by this waterfall. On the break-even tab you may find the calculation of revenue break-even level and break-even chart. For this particular use case, you may find that your revenue break-even level is less than actual revenue calculation. This means that company is profitable. On the Valuation tab, you may see the calculation of company valuation based on the cost of equity, which you may input here, cost of loans you previously inputted on the dashboard, calculation of resource share you may see here. There is also tax rate, and here you may find the weighted average cost of capital. In the valuation model there is 2 valuation methods, which is EBITDA multiple and revenue multiple. You may select one of them, and below you may input multiple of methods. Based on this information we can see terminal value, which is calculated on unlevered free cash flow. You may see the present value of unlevered free cash flow, NPV, and multiplicator evaluation for this particular company. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color you have some extra calculations related to revenue, to debts, equity, inventory and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements and setup. There is short explanation about what each tab does, but if you want to know more you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable, so you may click on, for example, Book Assets and you go directly to this tab. On the Wages tab you can input your headcount by categories, with hire and fire date, with annual salary, with ability to input different number of employees by years, with annual salary rise percentage, with monthly bonus and tax rate. Let me give you a couple of examples. Let it be CFO, which you are going to hire in March 20. You're not going to fire him, so the fire date will be December 24. So annual salary can be $50,000, and this will be one CFO over the time. So you may see one CFO, which is one headcount, starting from March till the end of the model, which is December 24. Also you can input 5% of salary growth rate. You may see the amounts by years connected to this annual salary and impacted by annual salary rise. Let's set up 10% monthly bonus and 5% of tax rate. So you may see below the calculation of salary broken down by months, monthly bonus, which is 10%, and 5% of monthly taxes related to the payroll. Another option would be admin account, which will start in April, which will grow till the end of the model with annual salary of $30,000. Let it be year number 1, 2, then 4, 6, 8, and 10 headcounts. 3% of annual salary grows, 5% of monthly bonus, and 5% of payroll tax rate. So in here you may see total staff numbers, just 2 for the year number 1, 2020. Starting from year 2021, you'll have 4, then 6, 8, and 10 in the last year of the model. Again, calculation of salaries for these 2, in this case 4 headcounts, calculation of bonuses, and calculation of monthly based taxes. You may see an income statement, total salaries and wages, and here you may see the total amount of bonuses, payroll taxes, and wages for these headcounts. On the Fixed Expenses tab, you may input up to 15 line items for your fixed expenses. Let me show you how it works. For example, you have utilities. You will start pay starting from March 20 till the end of the model, which is December 24. You may see it here. Let's pretend periodicity will be daily with amount of $50 per day. So you may see these amounts in here. It is calculated based on count of days within this month. So obviously in March 20 you have 31 days. That's why you will have 1550. In April you have 30 days. This means this will be $1500. Also, you have ability to input some growth rate year over year. Once you input this growth rate, you will see that your utilities will grow over year. Let me give you a couple of other expenses types. For example, advertising. Let it start in March and finish in August 24. This will be on weekly basis with amount of $100 without any growth. So starting from March till August 24, you have $400 per month, which is 4 weekly payments each month, and that's it. Another option is bi-weekly. For example, $500. You can start from July, for example, and you will have 2 payments, which is 2 bi-weekly payments within the month. $500 multiplied by 2, you have $1,000 per month. Again, you can input some growth rate, and you will see that your advertising expenses will grow year over year till the August 24, which is the last date of this expense type. Another option, office setup, which can be one-time payment, which will happen in February 20 with amount of $5,000. Obviously you should not input any growth rates because this is just one-time fee, and you may see that office setup will happen in February 20 with this amount. Another option, insurance. Let it be start from January 20 till the end of the model, and it can happen monthly with $1,000 per month, with 5% of growth first year, 3% of growth second year, 2% of growth third, and 1% year number 4. So you may see this calculation here. Starting from January 21, it will grow for 5%, which is $50. And starting from January 22, it will grow for 3%, which is additionally $32. Another option, quarterly, you may see that insurance will be paid $1,000 each quarter. You can start it, for example, from February, and this will be shifted to 1 month forward. Another option, semi-annually. In this case, you will have insurance payments once per half a year, again with a percentage of gross. And the last option is annual payments or yearly payments. You'll pay one time per 12 months, starting from February till December 24. For each expense type, you can use gross rate, and the calculation you may see in here. Also, in income statement, you may find total fixed expenses group. If you will ungroup this section, you can see these amounts broken down by months and by fixed expenses line items. On the Variable Expenses tab, you may find up to 6 line items to forecast your variable expenses as a percentage of total revenue. First line item is marketing expenses. This is a bit unique. The calculation of marketing expenses is driven by the dashboard amounts you may input in here, and also seasonality of marketing expenses spread by months. Another 5 line items you may change and forecast your variable expenses as a percentage of total revenue. Let me give you some example. For example, direct labor, you can set, for example, 15% of total revenue. Other variable expenses, 10%, etc. On the top you may see the total revenue as a basis of calculation for variable expenses, and below you may find the calculation of marketing expenses and other 5 line items based on these inputs. You may find your variable expenses breakdown by months and by line items in income statement in the section variable expenses, and see these values as a total here. You may input up to 20 development expenses categories. Let me give you a couple of real examples. For example, this will be kitchen and other development expenses. You can input purchase date for each category, for example, February and March. You can input spending, $50,000, $10,000, for example. You can also use payment delay feature, which means that if you will select for the kitchen 2 months, you will pay in April for the kitchen, and for example 3 months for other development expenses, which means that you will pay for it in June 20. The total amount of development expenses connected to the Assets tab. You may see it here. By default, the useful time for development CAPEX is 5 years, so you may see the calculation of depreciation and closing net book value. We are also able to input up to 6 other assets, for example, other CAPEX with launch date, for example, June, with 3 years of useful time, with $5,000 cost. You may see the calculation here. So in this tab you have calculation of capital expenditure, book depreciation, and closing net book value. The total amounts you may see in income statement tab in depreciation section. For the cash flow you can see the fixed assets capital expenditure, and in the balance sheet you may see fixed assets, assets closing book value, and CAPEX prepayments. In case of you will prepay these amounts, and if you will pay in some months after, you will have CAPEX payable. Because we set up 2 and 3 months payment delay, you may see that we have CAPEX payable. I can also remove here or select 0 months. In this case, CAPEX payable will be 0, but we will have just fixed assets amounts broken down by months. For the capitalization table, you can input different founders and investors contributions, broken down by different dates of funding, with different cost of share for each series, and you can see the dilution of shares after each round, and pre-money total equity and post-money total equity. Let's pretend that we have two founders, founder 1, founder 2. So total amount of shares for founder 1 can be 10,000, for founder number 2 20,000. Let's imagine that cost of share will be $2 and the date of founding is February. This means that investment for founder 1 is $20,000, for founder 2 is $40,000. In total they invest $60,000, which you may see here. The dilution is 33 to 67% of shares. So let's pretend that for Series A we have one investor and the date of issuance is May, cost per share is $5 per share and number of shares is 1,000. So total amount of investment will be $5,000. You may see that before the Series A total equity was $60,000, after is $65,000, and investor 1 will have 3.23% of shares, and the shares of founder 1 and founder 2 also diluted, 32.26 and 46.52%. You can also input some amounts for Series B and Series C. The same way you can set up the date, cost of share, and up to 5 investors is up to 5 placeholders for number of shares. The amounts of funding you may see in the cash flow, in the ordinary equity risings, and you may see the balance sheet, which shows you the total equity by months. Also on the top of the dashboard you have debt assumptions. Let me show you how it works. So for each debt you are able to select the debt type. There are two debt types in the model, which is annuity and usual. Annuity means that each monthly payment, which consists your debt repayment plus interest expenses, will be equal each month. In case if you will select usual, your main debt repayments will be equal parts and interest will be just interest on the debt's closing balance. Let me give you an example how it works. So you may input some amount of the debt, the launch date, term will be 60 months, and interest can be 5%. You may also input the grant, which is just simple amount, which is paid in some specific months, and that's it. No repayments, no terms in terms of interest. So all the calculations of the debt you may see on the Capital tab. Calculations for the debt number 1, debt number 2, debt number 3, total debts with grants. These calculations impacts income statement, interest expenses, the cash flow, interest paid, debt drawdowns, debt repayments, and on the balance sheet you have the debt closing balance. On the top of the dashboard you have currency, denomination, and taxes setup. So currency inputs means that you can input all your drivers for the model using one currency. You have currency outputs. It can be the same as currency inputs and it can be different from currency inputs. So let me give an example. When you input in United States dollars, you have euro as an outputs, and for this case you can set up currency exchange rate. This is 1.2 for example. In this case you will have in the model all your inputs in United States dollars all your outputs in euros, and there will be conversion rate between currency inputs and currency outputs. Additionally, you have denomination, which means that you can denominate all your outputs on the reports. In this example, you have denomination is 1000, mean that your outputs is denominated by 1000. You can select millions. You may see that now it is in $1 million. You can set also billions or without any denomination. Additionally, you have corporate tax setup. You can change this number and this will impact tax expenses in your income statement. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.